Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So since our last update, when we reported that the Dow was sort of trading in between the 23 and 24,000 range, it now seems to this week so far have peaked above 24,000, settling in around 24,500. Now again, it's going to remain volatile, but it's a good sign. You can't get back up to where we were unless you're going through these little milestones along the way. So it's a good sign. We like to see the markets start to recover a bit as we get more data about the economy starting to open up however slowly, and that this will not last for 2 years as some had predicted very early on. What we are seeing today is we had the GDP number come out, and GDP in the first quarter fell by 4.8%. It's an amazing drop. It was expected, but given that the economy was plugging along at 2.25% growth, that to have it drop almost 5% is a little shocking. But it's going to get worse, and we need to prepare for that. Second quarter GDP, I've seen estimates as low as 10%, which I think are low, as high as 30. The one that I'm going to show here is at 24%. That's the expected drop in GDP. For those that don't know, GDP is the gross domestic product. It's supposed to represent, a picture of economic activity in the United States. It doesn't mean the stock market, it just means economic activity in the United States. But when we look at let's assume it's a 24% drop in the second quarter, which we won't know for 3 more months. I mean, we're just at the beginning of the second quarter, but let's assume it is a 24% drop in GDP in the second quarter. And some people are very concerned. What does that mean? Oh my gosh, how do we recover from that? And what a lot of people are forgetting is that the US government right now has committed to putting into the economy, borrowing from the future, $2.7 trillion. So US GDP on average is about $24 trillion a year right now. So that's $2 trillion a month or $6 trillion a quarter. So if GDP falls by 30% of $6 trillion, that means it's expected to fall by $1.8 trillion for the second quarter. Now, the second quarter should also see $2.7 trillion in the form of $1,200 and $500 checks to individuals who are in the economy, who are working, for the Paycheck Protection Program money to start making its way to support payroll, for the emergency injury disaster loans, the EIDLs. Those are going to start to make their way into the economy. So when we're looking at what the real impact is to our economy, I mean, there's going to be lots of businesses that go under. There is no doubt about that. But what there will also be is a lot of cash that's being inserted by the federal government in order to try to shore up some things. So the sad part about capitalism is that when one company that isn't well funded, doesn't have a lot of cash reserves, goes under, its assets don't disappear typically. What happens is another company who's in the similar industry, who is well capitalized, takes advantage of the opportunity, buys their assets for pennies on the dollar, and then in a short period of time opens back up, and now the small guy lost and the big guy won. That's capitalism. And with the $2.7 trillion that we're going to see the federal government stick into the economy in the coming months, we sort of expect to see a little bit of that displacement going on as smaller businesses that aren't well capitalized get sort of swallowed up by the larger businesses that are, because these jobs that are being lost are not going to be lost forever. They're going to be lost for a while, and a little odd perverse incentive here is that it could actually take longer to get some of these smaller businesses and lower paying jobs back into the economy, as long as the federal government is basically saying we're going to pay unemployed people their state unemployment plus $600. So in California, on average, that's about $1,000 a month that unemployed people are getting right now. And for many service jobs, they might actually make more money not working than if they actually go back to their job. So how long it's going to take is sort of an unknown factor right now. But the point of this update is to help you see that the GDP numbers that we're going to be seeing, they're going to be big and they're going to look ugly. But let's not forget that the reason the federal government is borrowing $2.7 trillion against the future is so that they can sort of offset some of these losses that we're expecting to see in the coming months. If anybody has any questions about this or their personal financial affairs or the economy or the stock market, please reach out to me. I'm more than happy to answer any questions. So that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back soon with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.